Welcome to the Fear and Greed Business News Afternoon Report for Monday, the 17th of June, 2024. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the S&P ASX 200 closed down 0.3% today to 7,700 points. Pretty lackluster day, really, ahead of tomorrow's Reserve Bank interest rate decision. No one expects any change in the official cash rate, but everyone wants to know what the Reserve Bank Board is thinking about when it comes to inflation. When it comes back to the market, well, I'm sounding a bit like a broken record here, but it was another good day for the banks. National Australia Bank led the Big Four, rising 0.7% to reach its highest level since January 2015. Telstra shareholders also got some relief, with the telco rising 1.7%, while Aristocrat Leisure jumped 1.8%. Otherwise, among the large caps, it was mostly bad news, with BHP, Rio Tinto, Goodman Group, Woodside Energy and Santos all off more than 1%. Worst for the big caps was WiseTech Global. It was down 4%. Other notables today include Seven Group. It fell 4.2%. The A2 Milk Company dropped 4.6%. Best in the day was Sigma Healthcare, up 4.3%. Story number 2, iron ore fell more than 2% over the last 24 hours, and copper continues to fall from recent high levels after a mixed bag of economic data out of China. The data highlighted ongoing weak spots in China, especially in the metals-intensive property sector. While retail sales were stronger in May, industrial output and fixed asset investment both posted a slower growth, and home prices softened further. Metals prices have fallen over the past month in large part because of concerns that prices had risen too far relative to demand from China. Investors are hoping that a major gathering of China's leadership next month will announce steps to boost the world's second largest economy. In other commodities, oil fell slightly today, as did gold, and the Aussie dollar's buying just under 66 US cents. Story number 3, surgeons and medical professionals are easily the highest paid occupations, while engineers in the legal profession come in next. Surgeons took home $480,000 in the 2021-22 financial year, about 6 times more than the average Australian worker, according to data released today from the Australian Tax Office. Anaesthetists came in next at nearly $450,000, then financial dealers, internal medicine specialists and psychiatrists. Mining engineers, IT professionals, legal professionals and CEOs also made the top 10. At the other end of the scale, drivers, personal carers, fast food cooks and hospitality apprentices were among the lowest paid people in the country. Sydney's eastern suburbs had the highest average taxable income, while parts of Perth, Cottesloe, Peppermint Grove, they get an honourable mention, as do Toorak and Hawkesbury in Melbourne. Story number 4, the latest opinion poll from 9 newspapers have given the edge to opposition leader Peter Dutton over Prime Minister Anthony Albanese, with Labor's primary vote falling to 28%. For the first time, Mr Dutton has gained a narrow lead as preferred Prime Minister, 36% to 35%. The Resolve Strategic Survey shows that 40% rank the coalition better to manage the economy, compared to 24% for Labor. On national security and defence, it's 42% in favour of Mr Dutton and the coalition, 23% for Mr Albanese and Labor. The government had only a slight lead over the coalition when it came to managing the environment, but it had a substantial lead around immigration and refugees. Core support for the coalition is 36%, for Labor is 28%, the lowest level since attaining government, and the Greens lifted their support from 12 to 14%. And story number 5, landlords, holiday homes and businesses in New South Wales will be hit by an increase in land taxes in coming years, which the real estate industry says could cost owners thousands of dollars a year, which in turn could end up on renters. New South Wales becomes the 3rd state Labor government to target multiple property owners with higher taxes, following a bigger land tax increase in Victoria and a tax hike attempt in Queensland that was eventually abandoned. The tax hike in Victoria has been blamed as one reason why house prices in that state haven't risen as much as in most other states. Ahead of handing down the New South Wales state budget tomorrow, Treasurer Daniel Mookie said the tax-free threshold for land tax would be frozen at the 2024 level of $1.075 million and no longer indexed annually. It means more investment properties, holiday homes and commercial real estate will be captured by New South Wales land tax, and existing land taxpayers will progressively pay more. Principal places of residence and farms will generally continue to be exempted. That's it for the afternoon report for Monday, the 17th of June, 2024. Michael Thompson and I will be back tomorrow morning with a Tuesday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.